Well, Mullen, now Bollinger Innovations, has done it again. And this time, they've really gone for broke. On Monday, the company finally confirmed what many of us were waiting for, or dreading, depending on your perspective. A new reverse stock split is coming. But it's not the 1-4-40 some speculated. Nope. It's a 1-4-2-50 reverse split, officially going into effect on August 4th. Let that sink in. If you held 25,000 shares last week, by Monday, you'll be holding 100. And if you held 2,500 shares, you'll be lucky to keep 10. This is Mullen's most aggressive reverse split yet, and that's saying something, considering they already executed a 1-for-100 split back in June. They are absolutely pulverizing the share count, not to create value, not to drive growth, but to artificially inflate the stock price and avoid getting kicked off the Nasdaq. And what did investors think of this latest move? Well, Tuesday's market action said it all. BINI stock collapsed another 29%, closing at just $0.041 per share. That's less than a nickel, folks. The company has now lost more than 99.9% of its value from its previous highs, and it's not even clear what's left to lose at this point. The stock is essentially radioactive, and even the reverse split isn't expected to do much except by a few more weeks of technical compliance. The underlying issues? Still there. The business model? Still unclear. The financials? Still opaque. And the market cap, even after a recent equity raise, is sitting around $15 million, less than half the $35 million Nasdaq minimum. Remember, this is all to avoid delisting by August 26th. That's the real deadline. They might inflate the price above $1 with a 1-for-250 split, but if the market cap doesn't improve, it's game over anyway. And let's not forget, they still haven't filed a proper 8-K detailing the results of the July 26 shareholder meeting, where this split was supposedly approved. Just a press release. No filings. No transparency. No accountability. They did say they've eliminated $25.3 million in convertible notes and warrants, but again, there's no formal filing to support this. Best guess? They issued preferred shares to large holders in exchange for killing the debt. Which means more dilution is likely coming, especially once those preferred shares convert. And yes, I'll say it again, they're using the new ticker BINI under the name Bollinger Innovations, but let's be honest, this is still Mullen. Same management. Same playbook. Same outcome. So what happens next? Well, on Monday, your shares get cut into fractions. The stock price will shoot up, maybe over $10, for a brief moment. And then, it'll collapse again, just like after the last reverse split. It's become a pattern so predictable that, honestly, the best investment strategy might be to short BINI every time they reverse split. In fact, if you've been burned by MULN over the past 2 years, I say this only half-jokingly, shorting the stock might be your only chance to make your money back. Of course, this is not financial advice. But let's face it, for a company that's delivered nothing but broken promises, endless dilution, and catastrophic shareholder value destruction, it's hard to imagine a turnaround. So what are we left with? A 4-cent stock about to be inflated through a 1-for-250 split. A market cap too small to meet Nasdaq rules. A business model that's still more PR than production. And an investor base that's been bled dry. The rebrand to Bollinger Innovations isn't fooling anyone. This isn't a new beginning. It's a new label slapped onto the same old decline. And unless there's some Hail Mary, a surprise acquisition, a mega order, or a bailout from Elon Musk himself, this stock is heading straight for OTC status. That August 26th Nasdaq deadline? It's closing in. The clock is ticking. And Mullen, Bollinger Innovations, is running out of time.